Hey, folks, thanks for joining us today. We got a special edition, me and Alan. It is going to be the Epstein episode. I'm just kidding with you guys. I'm so sick and tired of the Epstein episodes. What we're going to talk to you guys about is wholesale versus retail. If you ever bought like stuff in bulk, you kind of know what I'm talking about. I just recently bought a refrigerator. I went to a warehouse store and got a much better price. So we're going to explain to you guys what is a wholesale mortgage company or a retail mortgage company and what's best for you. So that's what we're going to talk about in today's video. Alan, how you doing over there, buddy?
Very, very good. How are you?
So, how about those job numbers this morning? Did you see that?
A lot more than what they were expecting, double, right?
It was crazy because the ADP payroll number came out the other day or yesterday, and it was like, okay, there was a little more better jobs than expected, and then today you get a jobs report that's like 3 times more than where it was. And I was just watching some financial channel, and they're like, man, everybody's just keeps saying, dismal things out there, but it seems like the economy keeps chugging along. So if you're here today, folks, we're going to tell you or explain to you guys what's going on with mortgage rates and why's behind it. And then we're also going to dive into retail, wholesale. Where do you actually get the best rates? And we're going to expose some of these big companies for you. So without further ado, here, a perfect example is this. What a wholesale lender is. Here, let me get over to this thing. I just created this thing over here. Let me show you something. Where did it go? Right through here. Wholesale lenders. Okay, who are they? Well, they're companies like Rocket Mortgage, Wells Fargo.
You're talking about retail lenders, right, Dan?
Yeah. What was that?
You said wholesale lenders.
Oh, I'm sorry, retail lenders. So these are companies where you can go to directly. Okay, so they're these huge companies: Bank of America, Wells Fargo. My apologies, have to rewind that. So you use them because brand recognition. You know, you see them on the Super Bowl ads, so you're thinking, okay, it's a great company. That's probably my best choice, right? Well, there's cons to it. So they have great recognition. You can look them up on the BBB, and they probably pay people to make them look good. But most of these companies are really good. But do they have your best interest in mind? One of the things is go to some of these earnings reports and see how these banks are doing. So this is why we do what we do. So a retail company is like that. Alan, that's kind of how Alan and I met. Tell him our story. It's kind of interesting.
Yeah, we probably met about 15 years ago. I was at Wells Fargo, great bank, but all the loans that I couldn't do, I would give to Dan, and he would close them with no issues at better rates most times. And I was like, man, how is this even possible? I didn't know that this part of the business even existed. But I'm glad I found you about 15 years ago, because
that was a long time ago. So that's what we do. So here's what we do. Okay, so I'm gonna post this as a blog here shortly, and this is gonna explain to you guys what a retail lender is. And my apologies, I was going down a rabbit hole there at first, and then what a wholesale lender is. And basically, I'll say we're like a wholesale lender. And I'll explain who we are, what we do, just briefly so you understand it. We work at a bank. Okay, it's just a community bank, believe it or not. But that community bank has licensing all over the country. So that gives us licensing in all 50 states as well as Puerto Rico. But what we did is we're like, we can't compete with those guys. You can't compete with Rocket, Bank of America, these companies. They got billions of dollars. We're just, me and Alan on this team. If you reach out to us, there's 5 of us on our team. So we want to give you personalized service. We don't have, we didn't sponsor the Super Bowl and all those things. So that's one piece of the puzzle. We're a small place. Okay. The other thing is we're licensed everywhere. But the third thing is why you're here is right through here. What do we do for you? Or what do the wholesalers do for you? Well, these are companies that many times you as a consumer don't even have access to. And if you're a realtor out there, you know Rocket Mortgage and things like that. So we're going to use that as an example here in a second. But the wholesalers are kind of like us. We're set up with almost 40 different lenders. Why? Well, we want to make sure we have all the options available to you. Just think of it. Why Alan, he just said, he couldn't do a lot of these loans. And the reason being is, they didn't have the product, or they may have what we call an overlay. Like, for example, some banks, if you don't have a 620 credit score, they won't even give you a loan, not even an FHA loan. Well, that makes no sense because the guidelines say that you can do them. So that's an overlay. And then also, they have one rate sheet. It's like going to one car dealership. When's the last time you bought a car and just went to the one place, said, okay, I'll sign. Where do I sign? And you buy it. Okay, so that's that part of it. Now, what do we do? Well, we don't want you to go to 50 different car lots. You're going to spend too much money, too much time. By the time you get to that one and you like the other one over here, it's sold. So this is what we do for you. We have a place where we work where it's going to be one application, one credit pool. We're going to search rates all over the place for you so we can do all this for you. And like I said, many of these companies you don't even have access to. So that's what we do. And you go down through here and, Rocket Mortgage, if you want to deal with them, great company. You can use the Rocket app for all your money. Then you can use Rocket Mortgage for your mortgage. And then they'll set you up with a realtor to sell your house. Now you're dealing with them with everything. That's what you want for convenience? Great. If, 0.25%, 75 basis points on a rate, are you looking for the best rate, the lowest fees? Or are you looking for convenience? Well, we hope to offer you all that. So Alan, let's get over to explain what we do, how we do it, and the main thing people want to get is what kind of rate can you guys qualify for? So today, we want participation, folks. We need participation. Give us your information. Just give us what is your credit score, your home value, your loan amount, and what are you looking to do? What rate are you at now? Let's see if we can save you some money. I don't care if it's an FHA loan, VA, USDA loan. And if you need some help at the end of this, reach out to us. We'd love to help you because, again, we're licensed in all 50 states as well as Puerto Rico. So, Alan, let's bring up some scenarios today. What do you got for us?
Well, one thing that I wanted to bring up was we recently got an approval on a conventional loan where the borrower had a 577 FICO. That's a perfect example of where that would have plenty of issues at other banks with overlays. And I was shocked to see that the pricing was pretty good. It was still in the 6s. And I couldn't believe it. So if you want to go over that, we can punch that in.
Yeah, punch it in. Let's switch over to your screen. So, folks, here's what we're going to look at today. Alan's going to, if you need some scenarios on what kind of rate you would get, okay, we're going to show you behind the scenes. We're going to show you probably 30, 37 different lenders this is going to scan through that we have access to. So once you put in your application, we get you approved. That's what we're going to do in the background. So, Alan, let me flip it over to your screen so you can take it away, my friend.
Yeah, I think it was about a 50% loan to value loan where the lady was cashing out, refinancing her current mortgage and then taking some cash out. And it was a 577 FICO. I remember this. It was in Illinois.
Just so you guys know, 577, well, 60 days ago, it wouldn't get approved because it was not even eligible based on the guidelines. So what they did now is they basically wiped out all the guidelines on minimum credit scores. Supposedly, we don't see a lot of them still getting approved, but Alan, that's why Alan was bringing this one up today.
Look at this, 6.375 on a 30-year fixed conventional loan with a 577 credit score, cash out.
It's nuts. So these are where rates are. So let's get over to some. Well, here, let me do this. Do me a favor. I'm going to give you the basics of. I'm going to go through a couple different websites. Now, Alan's going to stay on the screen. If you guys want to do this on another screen, or don't leave us. But I'm going to first start out. Every day I come in with Mortgage News Data, and that's the rates that we usually use as our benchmark each day. Okay, so here's what they're showing on their screen. Okay, they have the rate at 6.14, but the criteria here is we're going to use a $400,000 purchase. These people were putting down 25%, so it'd be a 75% loan. They have a 780 credit score. And let's just use Chicago zip code, 60623, say. And that's the basic criteria that they have in here. So let's see, we're going to kind of show you behind the scenes how kind of this works. So what you're seeing normally on Mortgage News Daily, you're going to see a rate at 6.14, and it will be coming with cost and points and lender fees and things like that. I can show it to you if you want me to prove it to you. We can show you through there. There's what we call wholesale pricing. So, Alan, if you could just, here's the cool thing. It's the same criteria person. Okay, this is the same. We didn't change the name, anything. We had the same criteria. Scroll down and show them, this is basically, if you wouldn't have called us and you would have called somebody down below, what kind of rate would you have gotten and what kind of fees?
Yeah, absolutely. So this is a cookie cutter loan, we call it, where anyone that lends money would lend this person money. I mean, look at this one lender right here, 5875, cost them $10,500.
So that's a perfect example. When you go to like bankrate.com and all these places, all they're doing, they're not even a lender. They're giving you just kind of this stuff, and then these lenders are putting out these numbers that today. Now, Alan and I we were prepping for the show, and we're going through some different websites. Kind of, I said to Alan, okay, if you were going to join us today, what the hell do you want to learn today? What do you want to find out? We're sitting here scratching our heads like, well, what would you do if you're looking for rates? I've been doing this for 30-something years. So we just start looking through rates, and then you get on there, and it's like, this is so confusing. But here's the interesting thing is you look at these things, and sometimes we look at the rate, and it's like, holy shit, that rate's fantastic. But then you look at the fees. So you have to pay attention to fees. So that's why we come in every day and we say, we're trying to get you the best rate and the best fees, because a lot of times people just reach out to us and say, okay, hey, they got me, a 5.5% rate. Fantastic. How much in the fees? I don't know. They rolled it in. That's the wrong answer. Wrong answer. So you can see right through there. If you would have called, and we're not bashing any of these lenders on the screen, but you can see it's the same person's credit, same everything, in much different rates.
Yep, absolutely. And one thing is these lenders change orders daily. Whenever they change rates, sometimes maybe this lender is now number one, and then this lender is number three. It just changes daily. So
let's get, just for kicks while you're in there, this one's pretty simple. They have the 15-year rate now at 5.71 with the same criteria. I'm just going to run across Mortgage News Daily since I got it on the screen just to show you, is there a variance here? Actually, we're going down an uncharted road here, folks. So bear with us because I don't know how these results are going to come out. If you guys have questions, let's see if anybody has any questions on the side. If you got questions, hello. Hello, I want to know builder incentives. How would you use it? That is a great question. We'll get to that in 1 second. And actually, we just created a calculator. It's a 3-2-1 or 2-1 buy down calculator. I just posted. Check out our description down below. I'm going to offer you guys actually 2 calculators today for free. That you guys, especially if you're a realtor or loan officer, you're going to really want to see these things. Okay, so what do we got? Mortgage News Daily, 15-year is at 5.71.
5.375.
So you can see, but if you don't care about the extra half a point, go with convenience. We can offer that to you as well. We have, Alan, tell them about the, what's the new home equity loan program we have? We just launched it and you just submitted one the other day.
Yeah, it's a 5-day HELOC program, they call it. Basically, it's mostly automated. We would upload essentially the borrower's information to the lender system, and they scan everything online. They do a soft credit pull. They do AVM, they call it, automated value model. So they don't need an appraisal, and then they offer like 3 or 4 different programs for the borrower to choose from, whether they want like a 20-year term, 15, 10-year, different rates, different payments. And the person just selects whatever one they want and it goes from there. And then it funds in about 5 days. So meaning you basically have your money in 5 days after application, which is incredible.
That was crazy. You showed me the other day and it was within 24 hours and they were halfway through. They already picked in. What it does is it puts everything in your lap. You're picking the fees, the cost, the rate, this. You might take a little bit higher rate, a little bit lower fee. You customize it yourself. It's 5 days. So this person that you had, weren't they just, it was all just like credit card.
Yeah. It was, they reached out to us because they wanted to look at consolidating some bills, but their first mortgage was at like 3 1/8. And we're like, that's essentially free money. You're never going to want to pay that off. So they had about 30 grand in credit card debt, and they're making about $1,000 a month just on minimum payments for that. And then we found them this loan, and it was, I think the payment came out to be like $219. So just tremendous savings overall. And, I can't say for everybody, but, we would never want someone to pay off good debt with bad debt. And that first mortgage they have is fantastic. That's gold.
Yeah, we're never going to sell you. Here's how we look at it. And here's our motto here. And this is how I have everybody look at this. We want to put you in a loan that we would take. I'm not going to pay off a 3% loan to get, now if you were $150,000, $200,000 in debt and you needed all this other stuff, maybe that would make sense.
Right.
We're coming out with a calculator for that here soon. So let's get to some of the questions that we might have. The builder incentives. Okay, the builder incentives, here's what you want to do basically. I'll just give you a rough guideline on it, and then I'm going to show you calculators. I want you to go down below and hit there's like a Gumroad link, and you're going to want the calculator that says 3-2-1 booster, I think is what it says. Now you want to use promo code DAN, capital D, capital A, capital N. You'll get all those calculators for free. I think there's 10 down there now. They're really cool. And as we upgrade them, we're going to give you access to these as well. So make sure to use them, especially if you're a loan officer. You're going to find some value down there. If you're self-employed, we got self-employed calculators down there. I'm working on right now a rent analysis. So if you have rental properties, you can plug it in there. Because most of the people, it's like, even if you're a loan officer, you don't really, most people don't understand how to break it down and figure out what exactly does that income break down to. So these are all the tools that we're going to give you access to. So go down below. But what you want to do is you want to don't give a crap about the rate. Okay, so try to bring them down as much as you want. You want as much money from them as you can get. Okay, so we want as much credits as we can get with paying no points and stuff like that. Eliminate the points, pay a processing fee if they want you to, and everything else. We're going to take all the extra money, pay all your other fees. If it takes up all that money, okay, it's good. If you have money left over, what you want to do is do a 1 buy down, a 1-1 buy down, a 2-1 buy down, a 3-2-1 buy down, and the calculator down there you're going to get is you plug it in, and it'll tell you how much money is needed to do that program. So what it does is it's a temporary mortgage rate buy down. But then after you close, let me know. Because what we're going to do is we're going to start analyzing your mortgage rate and then pick a point where, okay, every month that you don't, you make a payment, you're taking money out of that little kitty that you're going to understand when you do that calculator down there. But it might behoove you to refinance kind of immediately because you had no cost there, no matter what the rate was. Even if your rate went down 0.5% or 0.75%, check it out to see if the savings is there. That's what I would do. Use all the money to pay all the costs. Don't pay points or bank fees. Pay all that extra stuff, and then use the 2-1 calculator down below to help you take it from there. So sorry about all that hoopla there. So we got what do we got here? $460,000 purchase price, and that is it. Okay, hold on, we got more. We have. Can you see it, Alan, or you want me to read it to you?
I got it. Yep.
Alrighty.
30-year purchase VA disability. 46650.
God bless you, brother.
What's it? No money down? Is that what we're doing?
Yep, 0 down, 780. Pulte. You're in a sweet spot.
780.
As Alan's looking that up, I'm going to kind of walk you through how we want to do this. The $25,000, you won't have any VA fees because you're disabled. So that's what I was saying. God bless you, brother. Hope you're okay physically and mentally. Just but thanks for doing what you're doing, and thanks for allowing us to do what we do as well. You're in a sweet spot because if you with a VA loan with the disability, you don't have to pay any VA fees. So you can just keep refinancing this thing. So here's what we're going to do. We're going to go with Pulte. Get as much flex cash as you can get. Use 100% of that cash to pay all your closing costs. I don't think your closing costs are going to be $25,000. You're in Florida. It looks like 34219. Is that Florida? I think. Your title fees will be kind of hefty, but you might have money left over. Yeah, he's in Florida. Is that in Florida? Yeah.
Yep.
If you have any money left over, please check out that calculator down below. Or email me when we're done. And I can send it to you directly. I can even walk you through it. We want to use all the money in your flex cash to pay all the costs, and then figure out how much money you have left over. And we're going to do a 1 or 1-1 buy down. And then after that, you're going to have to make 6 payments. Then after your 6th payment, reach out to me. We're going to look at refinancing you because with a VA loan, your disability and everything, the only fee you're going to have is basically title fees. We won't charge you anything. You won't need an appraisal. You won't need really anything. So we'll make it really simple for you. So check that out. Get the calculator down below once you close, reach out to me. I'd love to be able to put you in our RateWatch engine so we can monitor this rate for you as well. So thanks for being here today, Mr. Smith. I greatly appreciate it. Let's see what else we got. Is that Mr. Smith? $130,000. Thank you, sir. I got it there, Mr. Smith. Mr. Smith, thank you. The flex cash, got it. Alrighty. I need information on 2 cash-out refinances and a new purchase. Holy moly! Located in New York City. Email back, Dan. I just got your email, so I promise you I will.
Yep.
I think I sent it to Alan. So yes, I got it. I promise you I got it. I think I sent it over to Alan yesterday. I had some running around to do at home. My apologies. So I was a little behind on yesterday. But me or Alan, we promise you we'll get back with you today. You have my word on that one. And sorry for the spam. Let's see. I was trying to get no worries at all. So Alan, let's run another one. Let's just take this for example. We have Mr. Smith here, and he's looking at did you run the rates on it?
Yeah.
Let's see what do these rates look like. This is a VA purchase with no money down. People are looking for in the fives if they want to buy homes. Let's see what we got.
Right in the middle of fives.
You know what? We got to do a video on this, because I think 5.5. If you're a realtor out there, you're a loan officer, this is huge, because everybody's been sitting on the sidelines waiting for that number to get in the fives. And just think, if you bought, or if you're out there, if you're a realtor, even your loan officers, if somebody bought in the end of 23, beginning of 24-ish or so, their rates are in the high sevens. So if you got a VA loan, this is a purchase. Do me a favor, Alan. Can you swap that over to that program we use for all the veterans out there that don't require any appraisal or anything really? Just
Yeah, the Streamline
of their current mortgage. Yes, sir.
Let's see.
So, Mr. Smith, let's say, for example, after you closed, we're going to run this thing now as a refinance to see how much of a difference in rate there would be. Nothing.
Yeah. Well, I mean, nothing really.
Yeah. So there you go. Oh, let's go through some other thing. Hey, can you explain, Alan, if you guys don't mind, because our goal today was to explain, really take a deep dive into rates today and explain to you guys what's a retail. What do you mean by retail? What do you mean by wholesale? Hell, when I got in this business, my parents were like, why don't they just go to the bank? So today we wanted to just explain to you guys the differences. If you want complete convenience, maybe Rocket Mortgage is the place for you. They got the Rocket app. They bought Redfin now, so they now have, they're getting sued for it, but they have realtors for you, and they can provide the mortgage for you. So if you want a one-stop shop, that might be your calling. And if you don't care about the rate maybe being half, 3/4 higher, well, that's what to do. If you're concerned about this, then you start moving over to the wholesale channel of things. And that's what Alan and I do, and that's kind of what we're showing you behind the screens right now on this. So if you could break down the rates a little further, Alan, just what do people call that? And if you don't mind explaining, how you can break down the rates and things.
Yeah, so this is, when you open this up, you see all these other rates, and that's called the rate stack. So, I mean, technically, this person could get a rate of 4.5. I would advise strongly against that, because it would cost almost, just over $26,000 in fees. So the 5.5 is essentially the par rate. If you've ever heard that term, that means it's, you're not getting a lot of lender credit, and you're not really paying a lot for that rate. So it's kind of like the par right in the middle. But if you wanted, let's say, a loan to cover a lot of your cost, you could choose a little bit of a higher rate, like the 5.99 is almost giving you $6,000 to pay for other closing costs. Other closing costs would be, the title fees or recording or even escrow stuff, items like that. So, you do have a wide range of rates to choose from. And, if you wanted to maybe buy the rate down, let's say if you wanted to spend some money to get 5.25, it would cost you about $4,000. So this is the rate stack, it's called.
But the interesting thing about this is, let's say you went to the bank. The bank this is the only rate stack they have. The interesting thing is, Alan can go to another lender. The stack's completely different. Okay, that's where this comes into play. Let's take an example, if you don't mind. Mortgage News Daily. And I'm not picking on Mortgage News Daily. I've been a subscriber of them for 20 years. They have a rate today on the 30-year VA fixed, and it's a 780 credit score of 5.72. So if Mortgage News Daily, who probably has retail rates, is 5.72, what can we get you? 5.5. So you can see, if you're in that was a pretty tight range there. But if 0.25%, 3/8 of a percent, 0.5% matters or it doesn't, that's when you decide, who do you want to use? Rocket's a great company. There's a lot of great companies out there. But if you really want great service and everything else. That's when you use a wholesaler, and we're a perfect fit for that. I have an example for you, and it was breaking news actually the other day. We had a kind of a person at UWM. They are the country's largest wholesale lender in the entire country. One of their people just left there and joined our platform here. So that tells you the power that we have here at the bank, and we're only growing and growing and growing. So if you're a mortgage team out there and you want to see how we do this, and maybe can you get involved, reach out to us. We'd love to talk to you about it. It's not for everybody. They're not hiring just anybody off the streets. It's very picky about who's coming on. We're looking for teams as well. So that's that. If you're a realtor out there, we'd love to work with you as well. But this is basically what we want to show you behind the scenes. This is how rates really work. Let's get to one more, Alan, if you don't mind. Let's go. What else did we? We looked at the 30-year, a 15-year. Did we do FHA yet?
We did not. I was just going to suggest.
Let's look at FHA, folks. So we've gone through basically everything else. So we're going to go with FHA, and Mortgage News Daily is at 5.7. But the criteria there, as you even looked it up earlier, it's the same criteria as they use for the conventional loans, which is kind of odd, but at least they disclose it. So that's where I always tell you guys, you need to read the fine print. So let's see what.
All right, let's see. What was the Mortgage News Daily?
5.7.
Okay. 5.375.
Okay, so and again, I want to kind of reiterate this. The Mortgage News Daily. I'm going to take you off the screen for a second, because a lot of times people are like, those numbers are fake, and that's not true, and this isn't true, and nothing else. So there's our rates. There's the rates, folks. So again, if you really want to dive into these rates, you can go down through, and it'll tell you in the fine print. I don't know if it's down through here or not. It'll tell you all through these areas, basically how that rate is comprised. Alan, you remember where you found it earlier?
Yeah, go back up to the top. If you hit that in the right, learn about our rate survey. Yep.
Alrighty. Let's check this out while we're on here. Sorry for doing this on the screen, folks, but if you go down through here we go.
Top tier.
Top tier scenario is used as a baseline. Here it is. I'm going to bring this up so you guys understand. Okay? Especially if you're out there and you're looking to, I get it. When I'm looking, I just bought a refrigerator, and I'm crazy about it. I'm probably crazier than you people. I go out there and I look and tech this, and I AI it and do all this for a refrigerator. You're buying a house. So you really want to loan the fine print. So here it is. It's 75 loan to value with a 780 credit score. We use proprietary methods to adjust the rate to account for points. That can mean that lenders are quoting 6.125 with points, while there's a 6.25 technically. Then you go down here, lender loss, mentality, So it's a 75% loan to value with a 780 credit score. So if you put that criteria into an FHA loan, your rate 5.7. Did you pull that up already?
Yep. We're 5.375.
Okay, so yeah, so you can see that's just the averages. So when we meet averages, there's a lot of people higher than that rate, and there's a lot of people lower than that rate, and we are almost 100% times lower than that rate. So let's see if anybody else has any questions for us. So that is that piece of it. I will be posting this blog here in a minute. Let's see where it is. But here I want to show you guys. This is the, if Mr. Smith is still here or anybody's here looking to use builder credits, that's what it seems like the theme is today. So I'm going to have to do a video on that, but I'll do a video on this. We just posted this, I think it was about a week and a half ago. So this is for realtors out there, loan officers, or if you're looking to buy from a builder, this is the tool for you. Okay, so you've heard about those programs where it's like, it's a 2-1 buy down. It's that temporary buy down, 1-1, 3-2-1. Here it is. Okay, in its simplest terms, here it is. You're going to use the sellers or the builder's money for all these things, but basically what you're going to do is go in here and say, my loan amount is this, it's a 30-year term, my rate is this, and I got this much in seller credits available. So Mr. Smith, you're going to have $25,000 available to you. We don't know how much that we're going to have left over, but we're going to calculate this thing. And when it comes down here and it says, okay, this is the best scenario for you, and it's going to tell you mathematically exactly which is the best program for you and the whys behind it, all the mathematics behind it. So you can go right up through here, go down below. We have this calculator down below. You can reset it, do whatever you want, but it is working down below. Make sure you download those calculators. And again, they're all free. Just use promo code DAN, and it's all capital letters. Any other questions that we might have out here today? I told Alan to cut me off earlier if I start rambling, and Alan, you did a bad job. Well, let's go through it, folks. Here's what we're looking at for today, because there is no closing bell anymore because the views were not there, and I'm like, my views in the morning are really taking off, so thank you. So I'll be posting once each morning at the opening bell to let you guys know what's the agenda for that day, what's most likely going to happen. The next day we'll summarize what happened and why, and then I'll give you my outlook again. And then I'll tell you, should you lock or float? But right now, it looks like mortgage rates went up. I told you that this morning, but not as bad as it was expected. We go over through here. Mortgage bonds at the opening just crashed because of that fantastic jobs number. And then from there, it kind of came right back. And I won't say we're back to square one again, but if you look at a 5-day chart, we're just about right where we were about a week ago. So I've been telling you guys, if you're looking to buy soon, you know, rates aren't going to get much better. So if you're if you're a homeowner right now, you might want to use one of the tools that we just created, and that is our RateWatch tool. Right is up through there. Now it is. I put up their RateWatch 2.1 AI. It's not on AI, folks. I just monitor this myself. So put in your mortgage information right up through there. Let us know what rate you'd like to refinance, or how much of a monthly savings would you need to refinance, and it'll track that as well. So if you're looking to buy, refinance, or build, reach out to us. We'd love to help you, and this is what we do. We'd love to help you put you in the right programs and making sure you understand the reasons why these change every day and what you actually qualify for. So that's it for today, folks. Thanks for joining us, and we will be back next Wednesday, same time, same place, to help you understand a little bit